Small case, well, the term is catching up quite rapidly with tech-savvy investors. One can perhaps think of it as the portfolio management services for retail investors, where there's no such high entry barrier like the 50 lakh investment fee that typically applies to a PMS. More than 3.5 million users, a host of portfolio managers and stock gurus of Dalal Street are lining up to be a part of this frenzy. For a product that has hardly been around for a few years, Smallcases, which are basically curated portfolios, are making quite a splash in the investment fraternity, and today we're here to tell you and get you a better understanding of this new style of investing. A small case is a basket of stocks or ETFs curated around a specific theme or a specific investing style. While mutual fund investors buy units of a portfolio managed by a fund manager, Smallcase lets users purchase stock, recommended or otherwise directly. The equities sit in the user's demat account and the Smallcases can be customized to their liking. Smallcase is actually a Bengaluru headquartered company that was set up by 3 IITians back in 2015. This is a platform which comprises stocks or ETFs that reflect a theme or strategy and are managed by professionals with a registered investment advisor, research analyst or PMS license. Smallcase allows investors to put their money into curated bundles of stocks that are either offered by the research wing of the platform or through tie-ups it has with investment advisors. And if a customer wants to build their own bundle, that's possible too. Where users are, investors tend to follow. Several high-profile names including Sequoia, DSP Group, Nitin Kamath of Zerodha, Premji Investments and more recently Amazon own a stake in Smallcase. Very often on Moneycontrol, our viewers and readers ask us about promising themes to invest in or the next big sectors to bet on. So that's where Smallcase comes into the picture. Affordable pricing, a variety of themes and the ease of transacting are among the key reasons that have made Smallcases a hit among young investors. Such portfolios typically consist of 5 to 10 stocks and cost around 5,000 to 20,000, making them suitable for investors who cannot afford PMS, where the ticket size typically is 50 lakh rupees and above. It connects investors with portfolio managers who curate these specific small cap baskets with their expertise, and then the investment is made via brokers who have tied up with the platform. So all three stakeholders come together on this platform. 13 brokers have signed up with Smallcase Technologies, which has listed more than 250 strategies on its platform, created by more than 150 portfolio managers. Another similar startup, WealthDesk, arrived on the scene barely a year after Smallcase, offering similar bundled investment products, stocks and ETFs labeled Wealth Baskets. It has 60 plus portfolios on its platform and has partnered with 20 brokers. ICICI, a brokerage, also offers a product labeled One-Click Portfolio that serves the same purpose as a Smallcase. There are a huge number of managers on the platform. Prominent portfolio managers whose firms have signed up on these platforms include Abacus's founder Sunil Singhania, First Global Vice Chairman Shankar Sharma, Capital Mind CEO Deepak Shenoy, Weekend Investing founder Alok Jain, and Renaissance Investment Managers founder Pankaj Murarka. For all its benefits, investing through this route has its drawbacks too. The plethora of themes and periodic rebalancing makes benchmarking or comparing one basket to another very difficult. Also, given the concentrated and thematic nature of most portfolios, they tend to be riskier bets. Some wealth managers have expressed concerns regarding the absence of data available to showcase the risk-adjusted performance of these small cases and about tracking the error. The lack of track record of several portfolios and their fund managers have also raised red flags. Though as a safeguard, Smallcase Technologies aims to introduce a review and rating system in the next few months. We started by telling you how in Smallcase an investor owns the underlying stock and not the mutual fund unit. So rebalancing the portfolio can become a little tricky from a taxation standpoint. Every time a stock is sold, as the portfolio is rebalanced, capital gains tax must be paid on any profit made. But what perhaps makes it interesting for retail investors is that one can actually do an SIP in your chosen portfolio. However, some say that Smallcases are not an SIP-friendly model as the investment amount is not fixed. Moreover, the cost of subscribing to these bundles, some of which could cost as much as 35,000 per year to start with, may not make sense for those with little to invest. Given that it attempts to bring together the best of both worlds for retail investors, professionally managed curated stock portfolios with the convenience of a low ticket size SIP mutual fund is definitely something worth taking note of, especially for DIY investors.